Hi everyone, it's June 11, 2025 and it's 5:20 p.m. Japan time. Today, Nikkei closed at 3842 yen, up 0.5% from the previous day. And lately, we've been seeing a bit of a pattern. Stocks dip little during the day, but recover by the end and even push new high. It's kind of a literally, but overall the trend still looks upward. Volatility is down too. The Nikkei Volatility Index is at 22.8 now. The next moves will likely depend on today's US CPI report and headlines from US and China trade negotiations. In the US, the S&P closed around 6039 yesterday, still showing strong momentum. Gold is flowing around $3300, and the dollar yen is leaning back toward yen weakness again. So globally, the mood is risk on. People are watching closely to see if we break even higher. Meanwhile, I'm continuing to build out my power demand based economic model, but I'm realizing more and more is this. And market structure is visible in daily data, so it's easier to catch shift. But when a trigger event is coming, the key to predicting the scale of a move lies in the understanding the real economy. And right now, the two metrics I'm watching most are electricity consumption and monetary supply. Electricity usage is clearly strong, probably thanks to AI growth. That tells us the real economy is healthy. On top of that, inflation is cooling down, so we've got a sweet spot. Strong economy, falling cost, EPS range returning. Now, about electricity cost, yes, kilowatt-hour price are rising, but thanks to Biden 2022 energy subsidy laws (IRA), real electricity cost for household and business are kept low. So while AI is driving up energy use, policy is holding down its economic drag. That balance is key. Looking back, in early 2025, more money supply growth flooded. Then Trump announced new tariffs that triggered a sharp correction, especially since equity positioning was heavily skewed. But the reason markets bounced back. Electricity demand and stayed strong. The economy did not die, it just reset. Now, if CPI keeps dropping and the FED cuts rate in response, we are likely to see money supply rise again. That would create a tailwind for equities, especially in sectors tied to real economic strength like energy. And finally, we talk of who the next FED chair might be and whether Powell stays or not. The real focus should be on how soon rate cuts come. And today's CPI data might give us some big clue. So all in all, I'd say the real economy looks solid, not fragile. Market are cautiously optimistic. If we get good headlines from today's data and trade talks, expect sentiment to shift fast. Let's keep watching. Thank you for listening. If you enjoyed this, follow and think of my contents like a long-term core put option. See you tomorrow.